Hi, it's Jennifer Dizmang with the Dizmang Group. I'm a professional speaker that travels nationwide, and my topic is how to buy real estate in a retirement plan. So let's take a look at how is that possible. A lot of people don't realize that when you have a retirement plan, whether it's an IRA or a 401k, they think their only options are to invest in the traditional types of assets, things such as mutual funds, stocks, bonds, CDs, things of that nature. What I do is I show people how, in addition to doing this side, now you can truly diversify over and be in a position that maybe your IRA or your 401k, regardless of what kind of account it is buying maybe a condo. Or maybe your IRA is picking up some foreclosure properties or short sales. Did you realize you can do things of this nature, buy these types of investments within a retirement plan? Most people don't. Now don't worry, this isn't anything new. This has been around since the mid-70s when the IRAs came out. But what it was is, unless you had a CPA or a tax attorney that could take you to a company that would allow you to do this, you probably didn't know where to go to find it. That's why I'm here today. I show you where to go to find it. I also train people on what are the rules when you're doing it, because it's very important that if you're doing the non-traditional investments, maybe you're doing notes, lending money out of your IRA, you can't lend to yourself, okay? There are rules on that. But you can lend to other people that are not related to you. Maybe you're buying tax lien certificates, things of that nature. So when I'm teaching people to do this, it's very important that you're following the IRS regulations, because they don't mess around. They don't tell you what you can buy in a retirement plan, they just tell you what you cannot buy in a retirement plan. So I like to travel around the country, teach people the rules, and give people alternatives within their retirement portfolio. Now typically when you have a retirement plan, on every kind of plan except the Roths, you are in a position that your money goes in pre-tax, all of your profits and all of your gains grow tax deferred, meaning you're not paying taxes on those profits as you're earning them. They all get to go back into the umbrella. And then when you start using the money at retirement, you're taxed at whatever your ordinary income tax rate is at that time. Now the beauty of being able to have these types of options is, let's say your IRA owns a condo, you buy the condo for $200,000, your IRA sells it a year later for $300,000. All of the profits go back in to the IRA with no capital gains tax at this point, no tax. It all gets to compound and grow. And on the reverse side though, if all the profits are going into the plan, your expenses are going to be coming out of the plan, okay? So some of the things that we talk about in the seminar is we talk about how do you put together the deal. A lot of people are under the misconception they think they have to have all the cash, right? Like, hey, I have an IRA and it has $300,000 in it, and I found a place I want to buy for $100,000. That's great, easy, cakewalk. Everybody loves cash, right? But what if you don't have enough cash in your retirement plan? A lot of people think if they don't have all the cash, they don't have the options. Fortunately, that's not true, because your retirement plan can also take a mortgage. Did you realize that? Holy cow, you can use leverage within the retirement plan. Most people don't know. Now there are some rules to when it's taking a mortgage. Okay, it needs to be a non-recourse loan, and during the classes we talk about what does that entail? What does that look like? What are the rules when it is a non-recourse loan? You're also going to be looking at a lower loan to value, more like a 60% LTV, not the 80-10 or the 90-10 that we get so used to, or the 80-20. One of your other options is you can also partner with a retirement plan. So whether it's myself or whether it's a friend of yours, a business partner, you're in a position that you can, if you don't have all the money, or you for some kind of tax reasons want to partner up, you can be in a position where you're doing that. So let's take a look at how that would look. If, let's say you find a property for $100,000, okay? And from your IRA, you want to bring in $30,000. And as a person, you want to come in on this deal. So I'm coming in as Jen with the other $70,000. You can do that. Now, here's the key though. You can't do this on something you already own. All right? There's no way to take property that you already own as a person and get it into the plan, or vice versa, because the IRS is very specific that you can't buy, sell, or exchange property back and forth between yourself and the plan. But the reason that this is okay is because neither your IRA nor you as a person already have ownership in it. So when you're partnering like this, it has to be dollar for dollar, percentage for percentage. Meaning, if my IRA comes in with $30,000 on this deal, it's a 30% owner. I can't make it a 50% owner, okay? Dollar for dollar. And then I, as a person, would be a 70% owner. So what does the title look like? The title looks like Jenn as an individual, 70% owner, and then custodian for benefit of Jenn's IRA, 30% owner, tenants in common. As a result of that, what would happen is 30% of all the profits go back into the IRA, in which you're not paying taxes on that right now. Very nice. And 70% of the profits will come to me as a person. I'm still going to pay my taxes on that, but the trade-off is now I also get 70% of the write-offs. Because any expenses that are happening in the IRA, I don't get write-offs for, right? And at this point, you're probably going, what? Then why would I even do a deal in my IRA if I can't take the write-offs? Well, one thing I like to point out to people is the IRS is not going to give you tax-deferred or tax-free money and write-offs. They're so picky like that, right? It's an either or, it's not both. So, if your condo is owned by your IRA and you have a water heater blow and it's $300, your IRA is going to pay the guy that fixes it the $300. At the end of the year, you don't get to write that off. But at this point, we probably don't care because, oh look, all the profits that were coming in, we weren't paying taxes on that anyway. Now, let's talk about what some of the regs are according to the IRS when you're doing this. They're called prohibitive transactions, and prohibitive transactions are the things that you cannot be doing in the retirement plan. The biggest thing to remember when you're doing this is everything happening in your retirement plan is for future use. Okay, you cannot have any personal benefit right now, and neither can anybody who's disqualified to you. And normally who I see people getting in trouble with the disqualified people are going to be like their spouse, their children, their parents. Those are all disqualified people. So not only can I not have benefit, I can't have my IRA buy a condo and stick my kid in it while he's in college, right? Or put my retired parents in it. Can't do it because those are all disqualified people. However, my IRA could buy a condo and rent to you all day long because we're not related, okay? Some of the other prohibitive transactions that you need to make sure are not going on within the plan is, excuse me, you can't live in this place, right? You cannot put your primary residence in your IRA. You also cannot put your vacation property, no kitty condos, none of those are gonna work. Also, don't think that you can be running around out there quit claiming stuff back and forth between your name and the IRA. I always see people wanting to do that. That's a big no-no, okay? One of the things that I teach people when we're doing these classes together is you want to operate by the rules, because if you don't, the penalties are very, very steep, and nobody wants to have Uncle Sam coming to dinner, right? So, this is my contact information up here. My name is Jennifer Dizmang. My website is www.jenn with 2 N's, Dizmang, D-I-Z-M-A-N-G.com. Feel free to contact me, whether it's because you'd like a class, whether you're a realtor that you want to build a profession, a niche out of your profession on how to sell this to your clients, or you need the business coaching. Give me a call anytime. My cell phone number is 970-420-3230. No crank calls at 2 a.m., okay? All right, 970-420-3230. Thanks for spending your time with me today. Good night.